Good morning, everybody. How's it going? It's Stock Picks by Tim. In today's video, I wanted to look at senseonics really quick. We're going to look at a couple things here. I also wanted to bring up the chart. We are flirting with the dollar, and this company is definitely not without its risk. Because if this does go under a dollar, it'll get the NASDAQ compliance warning, giving it, I believe, 180 days to get back over a dollar, meaning either a reverse split or we just have to naturally go over a dollar, with the stock rising. So that's definitely a thing to be aware of with senseonics, and heck, with a lot of these small caps, they're anywhere near a dollar. It is very high risk to be buying these companies in this current macro environment. That being said, I like the long-term prospects of senseonics, and there's a reason I still cover it. But we're going to look at a couple things. Don't forget to like, subscribe, hit the notification bell, check out the links down below. Everything I go over will be down below. Don't forget to check out the links for some free stocks and cryptos, and let's take a look at SENS stock. Now, first off, to bring some of you up to speed, they were approved for their 6-month CGM, and they do have a full year continuous glucose monitoring device offering on the horizon. Now, as for this 180-day device, there was actually studies last summer showing that this 180 device or 6-month device, performance-wise, is comparable to their 90-day version. And when compared to traditional blood sugar meters, meaning a finger prick, the sensor's results deviated only over 9% of the time on average. It was also able to alert users to instances of hypoglycemia with a 93% accuracy. And then also, as for implanting, removing the sensors, there was a 1% that experienced a mild infection. This could just be due to the procedure being performed poorly. Maybe something wasn't sanitized correctly. But I'll leave this article for you down below. This is definitely an older article. Now, we did have something recently here by Benzinga, and they think that the reason in the middle of the month here, senseonics spiked because of the Blue Shield policy that's going to be effective January 1, the new year. I personally think they're just trying to pin it on something, and I think that it just went up when the overall market also went up. But we've got another one here from Seeking Alpha, and this kind of gives a prediction of 2023, and I gotta say they're kind of accurate. 2023 will be the make it or break it type of year for senseonics. Either things are going to go great, they're going to continue to get adoption, they're going to continue to grow that revenue, which is what we want to see. They're going to get closer and closer to profitability. Or, there's always some unforeseen issues. Maybe adoption doesn't go as planned. Maybe they run into some snags along the way. Maybe they do have to potentially reverse split if we do stay under a dollar for long enough. But I did want to bring a couple things on this article, a couple things that are very interesting to me. And this right here shows the most desired continuous glucose monitoring device improvements. And they say longer sensor wear, better accuracy. And these are both things that senseonics product has over Dexcom, over Medtronic, and over Abbott. Now, we of course recently have Anthem coverage, which expands access to over 250 million lives, and commercial payers seem to be adopting the 180-day payment structure very well. And we do have news here that Medicaid issued G-codes, which are effective at July 1st, providing Medicare beneficiaries access to the 180-day product. And coming down to their pipeline, you'll see that everything that they set out to do, they have done. And I believe they actually did integrate with Apple, so this might potentially need to be updated. But they do expect over the coming years their full 1-year product. And their 180-day product is already a groundbreaking product. But how do you guys feel about senseonics? Do you think they're going to make it through 2023? Do you think they're going to potentially be forced to reverse split? What's really important to me to see is an accelerated adoption. Now that they've been FDA approved, now that more and more care providers are learning how to install their product and learning that this product even exists, we should see more and more adoption as the time goes by. Now, looking at senseonics, you'll see that we are just hovering for dear life right over a dollar. One thing that's concerning to me is the RSI looks bearish, the MACD looks bearish, and the candles are bearish. We are under the EMAs. We're struggling to even hold over the 50-day. I personally think $1 can become the resistance for at least the short term. Just looking at how this chart looks, definitely doesn't look attractive. And we have gone under a dollar before, but it was very quickly recovered. Maybe we do that again. Maybe we test under a dollar, test 90 cents or so before quickly spiking back up. It's definitely risky at this point. And heck, any stock, like I said, in this current environment that's anywhere near a dollar is definitely very high risk. And when you look across the board at so many companies that are so down, you can likely go with a lot of safer companies that have a much better risk to reward profile. However, that being said, I believe in senseonics product for the long term, and I think they have something extremely innovative. Now, one thing that's good to see is their next earnings coming up in a couple months. They do expect $5.5 million in revenue. This would be a record-breaking quarter. One thing that you'll see across the board with senseonics is, for the most part, they've had consistent revenue for the last couple of quarters. Now, there was a quarter back here last year. We had a $4 million reported quarter, and then we started dipping. But we have since beat that quarter, and our last quarter was a record-breaking revenue. We might see that again, which would be a great thing to see, but we still aren't going to see profitability. They are still burning some cash. We need to see that revenue come in and accelerate. So this stock is definitely risky, but hey, it's a small cap. It's in the nature of small caps. And as I've said before, guys, you definitely want a diversified portfolio. You don't want to just go all in on small caps. I know on my channel, I definitely talk a lot about small caps, but that isn't all I own. Small caps to me are definitely the most interesting. To me, they also offer the most potential reward, but they are also the most risky. That being said, I will continue to invest in Senseonics. I believe in their product for the long term. Short term, I wouldn't be surprised to see this come down. See this find resistance at $1, which would definitely not be a good thing. But what do we know? Well, we know the market is forward looking. We know that the Fed is projected to raise rates a couple more times. We do know that inflation is coming down, although it is still very high. And we do know that the housing market and employment has to continue to buckle. The Fed can keep throwing gas to the fire until they see those two things, housing and employment. As they see those are somewhat strong or somewhat okay, they will likely continue raising rates, in my opinion, until inflation is under control. They did say they want to consistently see it in that 2% area. So in my eyes, due to the macro environment, companies, small caps specifically like Senseonics, even CleanSpark, although CleanSpark also has to do with Bitcoin, but you could argue that Bitcoin's going to kind of do its thing with the market for a little while longer. I'd say about 4 months at the bare minimum. But I don't mean to ramble on. This video is going to take forever to upload. Hope you appreciate these videos, guys. Thanks as always for watching, and have a good day.